Before we get started, check out our sponsor, ProPureUSA.com. That's ProPureUSA.com, the leading innovator in water filtration systems. Get all of your water filters at ProPureUSA.com. Click the link below right now. Hey everybody, I'm Christopher Green. You're tuning into AMTV, Alternative Media Television. It is, of course, Wednesday, July 2nd, 2014. And as we approach the holiday July 4th weekend, we have Wharton Business School professors, such as Mr. Siegel here, saying that the Dow Jones Industrial Average could soar to 20,000 by year end. In fact, he says it could go as high as 22,000 in the not-too-distant future, of course, on 0% interest rates into infinity. The sad thing is he's probably right, because the Federal Reserve won't change policy and have kept rates, interest rates, going on almost 6 years now. As we approach Year 6 at 0% will only fuel the fire of these inflationary measures. Again, pushing a bubble into the stratosphere much worse and much bigger than what we experienced in 2008 that ended in the worst stock market and economic calamity that we had seen in recent history. I would argue worse than the 1930 bubble pop that resulted in a decade-long Great Depression as well as World War II. Now, of course, our World War, if it's not already here, coming, all a byproduct of this financial gangbanging and whoring of the Federal Reserve. These too-big-to-fail banks, etc. Here's the article. Dow says he could go to 20,000 by year end. According to Mr. Siegel, Uber bull Jeremy Siegel said Wednesday that he expected the market stampede to continue. That's right, the bulls pushing the market higher on the fumes of 0% interest rates, easily pushing the Dow Jones, topping 18,000 by year end. He says, I would not be surprised to see it over 18,000, he said. I think the big difference between what I see now and what I saw last year is the interest rate situation, with interest rates actually going even lower this year. That's what's so incredible about it. In fact, things are so good that the Federal Reserve is going to keep interest rates at zero forever. Now, of course, all this sparks great concern and sparks financial asset bubbles as well as inflation and potentially even hyperinflation in the not-too-distant future. In fact, we might all be carrying wheelbarrows of cash around to buy groceries. Bread and milk at the grocery store if they're still open. If that hasn't caved as well and there's not 50% unemployment and 100% hyperinflation on an annual basis because of the gang-banging financial whore policies at the Federal Crooked Reserve. We also had a staged meeting today between Christine Lagarde, head of the IMF, and Janet Whorebag Yellen, a staged event and staged conversation where she says, although they've kept rates at zero for far too long, creating even bigger, more aggressive, violent asset bubbles, maybe even potentially entering a hyperinflationary period here in the United States of America. I mean, we've got professors, folks, saying Dow 21,000 here in the near future, Dow 20,000. She says even though she sees bubbles on the horizon, if not already now, they're not going to change interest rate policy. Yeah, that's right. She's leery of using rates. And they like to use a lot of fancy words. You know, they wear their gold chains, no different than a rap gang banger, just dressed up all nicely and all smugly in her black little suit here, you know, to give off the image and portray the edge that, you know, they're somehow so much smarter than the rest of us, you know. They know how to handle our financial system so much better than us groundlings. Yet they will fail to do what's in the best interest of the United States, people, our economy, and what the mandates were supposedly set up in the first place with the Federal Reserve, with the primary objective of price stability and unemployment, now rigging our financial system and our market in general into utter chaos as we sit literally on the edge of a cliff with bubbles far worse and more aggressive than they ever were before. And just to give you an example of these fancy words that they like to use, Yellen says she sees pockets of increased risk-taking. Falling corporate bond spreads and volatility indicators are signs that investors may not fully appreciate the risk of future losses, Fed Chair Janet Yellen warned on Tuesday. She says, taking a variety of factors into consideration, I do not presently see a need for monetary policy to deviate from a primary focus on attaining price stability and maximum employment. She says, I do see pockets of increased risk-taking across the financial system, and an acceleration or broadening of these concerns could necessitate a more robust macro-prudential approach. Yeah, that's right. I mean, it's like they're speaking another language. Macro-prudential? I mean, honestly, Janet, you freaking whore. You freaking scumbag. All of you gangbangers should be arrested and thrown in jail for manipulating our financial system and potentially creating a hyperinflationary environment here in the United States of America. Utter and absolute chaos based on every knowable metric. In fact, follow me on Twitter at AMTV Media if you're not already. I have over 20,000 followers and growing by the day. Here I put out a chart yesterday notating that the Shiller PE ratio, price to earnings ratio, rose above 25 in 1901, 1929, and 2001 and 2008 pre-crash. The PE today is 26.3. Again, the PE not rising above 25 before a major crash, recession, if not depression, in 1901, 1929, 2001, and 2008 pre-crash. We are now at 26.32 today. You can see here Black Tuesday, Black Monday, and here where we are today. Again, just repeating history, but in unknown territory now, because we have never had this kind of unprecedented stimulus literally in the history of America or the history of the world, with the Federal Reserve accumulating some odd $3 trillion plus on their balance sheet, buying and providing all liquidity to the market and things like bond purchases, as well as escalating our debt burden and national debt here in the United States well above $16.5 trillion. The S&P 500 currently trading at over 26 times earnings. The long-term average going back more than 130 years is 16.5. Yet we trade at 26.32 today. Again, repeating history in total and utter no man's land. Bubbles bigger than they ever were pre-2008, and I would argue in 1929 or even the 1901 crash that many of us don't even realize happened because it's much too far back in our short-term minds to really rely on that history, even though it's telegraphing and giving us red light warnings that all of this is repeating again. 4 signs that the stock market is overheating. Of course, I spoke about this last week with GDP actually turning negative. You know, they release initial numbers saying we had positive growth. People have short-term memory loss, and then they come out several weeks later and let us know that we had negative 2.9% GDP growth. So while the bubbles are forming, while we're hitting all-time highs, approaching Dow 17,000, while professors from the Wharton Business School say we're going to hit 20,000, maybe by year end, up to 21, 22,000 plus, who knows, maybe 45,000, we actually have negative growth here in the United States of America at negative 2.9%. Also volatility, and I've spoken on this quite recently, really at almost all-time unsustainable lows here on the VIX at 10. I mean, the market just chirping, barely chirping, so incredibly quiet. In fact, I pulled an article here saying that on Wednesday, the S&P 500 is trading in a mere 0.2%, 0.2% range. If that sounds small, in fact, according to technician Jonathan Krinsky of MKM Partners, this range ties December 30th, 2013 for the title of narrowest S&P 500 range going back to 1992. So the market chirping on low volatility and really just moving left to right as it steadily rises with these inflationary pressures and 0% interest rates. Again, our economy actually contracting and shrinking with a negative 2.9% contraction in the recent quarter. You know, they lie, the scumbags lie, say we have growth, but it's actually contracting as we hit all-time highs. I mean, I want you to think about that. Our real economy shrinking while the market inflates to new bubble territory. I mean, if this isn't catastrophic, I don't know what is. I mean, every American should have their pitchforks in front of the White House right now. I mean, this is potentially life-altering and life-threatening. Not just economically threatening here in the United States, but life-threatening. We could be looking at 50% real unemployment rates here in the not-too-distant future. We could be looking at 100% annual hyperinflation here in the United States, carrying wheelbarrows to the grocery store because of these financial criminal scumbags like Janet Yellen seeing pockets of increased risk-taking and macro-prudential risks in our economy. You know, these
fanciful figures sitting on their fancy chairs telling us Americans that they have everything under control right before the end of the world, right before the catastrophic consequences slap every American in the face once again, like it just recently did a couple years ago in 2008. Again, the correlation also noticeable. Several articles I pulled here showing the correlation between the S&P 500 and the Federal Reserve balance sheet. And if you take the chart out here further from 2008, you can see that with every purchase, with every active purchase of mortgage-backed securities and an expanding balance sheet of the Federal Reserve here marked in blue, the stock market, the S&P 500, rallies hard. And anytime they just keep purchases steady, we have a crash. We had a flash crash around this time period. In fact, I was there. I remember it with a 1,000-point tech drop, this quant trading computer system drop in this 2010-ish period. When the Fed purchases went flat, we had a crash and a correction. When Fed purchases went flat again in the 2011-2012 range, we had another crash, so they stepped up purchases again. And every time they step up purchase, we have a direct correlation with these asset purchases and an ever-expanding, debt-laden, debt-ridden Fed balance sheet with a hyperinflating, I would argue, stock market into infinity as the S&P 500 reaches new highs and the Dow Jones Industrial Average approaches 17,000. And these professors at the Wharton Business School say we could hit 20,000 by year end. All of this real possibilities due to the financial gangbanging of whores like Janet Yellen at the Federal Reserve, worried about macro-prudential trends in our financial system and seeing the risk of big, ever more aggressive bubbles, but failing to do a thing about it and are going to continue to keep interest rates low into infinity. All of this, again, will come back to haunt us, potentially collapse America for good, send all of you onto the streets into a hyperinflationary environment that literally, in my opinion, could destroy America for good. Absolutely incredible. The biggest bubbles we have ever seen in the history of man actually occurring in real life right now. This is history in the making, and it is an absolute fall of the empire that was once the United States, making the same mistakes as we did before, and honestly sending us into financial, economic ruin, in oblivion of what America once was. I'm Christopher Green. Get it out everywhere. Make it viral. Hard-hitting it in your face. And click the link below to support our sponsor.